See us, or are you?
Yes, welcome to Momentum to Monday. Today is June 19, 2022. Happy Father's Day, Howard, and all fathers. What's going on? How's life in Coronado?
Going for a run on the beach, you and me tomorrow. You and I, you and him.
Sure.
What a treat that must be for you to run at a 12-mile pace instead of your 6-mile pace.
Yeah, absolutely. You know,
people, when I run with you, people always go, "It's Howard and Gary Shandling on the beach."
Exactly.
And then you go, "Who's Gary Shandling?" in a Bulgarian accent, and people just go, "I thought he was dead." So it's good to be here. You can just
maybe I'm his son. Who knows?
You know what's interesting, Ivan, is that I had COVID in the Bahamas with no symptoms, not sick, and then I've got the flu, and I feel like I'm dying.
Wow, happens.
Yeah, brutal. Did you get this flu that was going around? The strep?
No, I haven't.
Knock me on my ass. 5 days. I'm never sick for 5
recently?
days. This whole week, my first week in San Diego, I was just sitting in this chair complaining to the state.
Okay, are you? Is it safe for me to come tomorrow then?
Listen, Ivan, it's never safe to hang around the Howie town. Yeah, I mean, how could I still be infected when I'm ready to run? I rode 30 miles today. Feeling better.
Good.
Yeah.
I mean, I guess the market has been hit by flu too.
Wait a minute, there's a bear market? It just feels like it was, I don't even remember anything. The good thing about having the flu is I was so drugged, I don't remember anything last week. So tell me what happened.
Yeah. Well, hopefully you're not long a lot of Bitcoin and Ethereum and other stuff and Luna. So
Luna's coming back, baby. I just feel it. I trust that guy.
Yeah. So it seems like the market knew that the Fed is going to become more aggressive and is going to start raising rates in a more aggressive manner because, you know, the market started selling off basically a few days ahead.
Why is Kathy Woods the only person who doesn't believe the Fed has raised rates yet?
I don't know, that's her own deal.
Would you quit? Would you have quit? Would you have stormed out already if you were working for her?
Oh, it depends how much she's paying me, right? So,
oh my God, you're on fire today. You're on fire.
So the Fed raised the interest rate with 75 basis points, and it seems like at this point the market is becoming more worried about recession than about high inflation, because even the oil and gas sector, which has been the last remaining leading sector, was hit pretty hard. I mean, right now XOP, which is oil gas ETF, is down 20.
I mean, this is the first
24% from its
buying opportunity in energy for about 6-7 months. So we'll see if people.
Yeah, if you're bullish, this is your chance.
Up. Yeah, I'm for the first time, you know, I love, it's a bear market, but so the strategy doesn't work in a bear market, obviously, but XLE in a bull market, you know, I sold a bunch of the 70 puts, just full disclosure, XLE.
Okay. So, I mean, the XLE is like,
I figure at 68, I can trade around this position. If this gives up the ghost, and it could, because Kramer was saying oil is the only thing you can own about 2 weeks ago. I literally was saying that.
So keep in mind that XOE is structured very weirdly, like XOM and CVX, like each of them is like 30% of the index.
I'm good with that. Yeah.
And the XOP is the one that is like better diversified, owns more name with a smaller percentage allocation.
Yeah. Good point. Yes. Thank you. Good point. But I specifically did it for that reason. I prefer to own the bigger names or trade around the bigger names. Yeah.
Okay, so basically the last remaining leaders were hit pretty hard. Obviously, many of them are still in an uptrend, so they might bounce.
Well, they should bounce. I mean, I'm not saying, who knows?
Well, in a bear market, you never know. Like, yeah.
Yeah. Again, energy is in a super bull market because no one has supply, or at least that's the narrative. Sorry, and you know, America. It's summertime, people need to travel, so demand should stay strong. But yes, you're right, this is like a market where nothing.
Yeah, I mean, depends how far the market is looking. If the market is looking six months in the future, 9, and saying, oh, maybe oil demand is going to drop substantially, who knows?
But you're right. In an evil bear market, it's like it comes for the last person standing. What I mean, it's just so brutal. But like, I'm starting to see some relative strength within broken tech. But if we look at the Qs, Ivan, on the weekly, I mean, we're going much lower. Like in an environment where they're raising rates, and that they seem to have given up caring about saving, and they shouldn't care about saving the investor. It was fucking fluff. But you had the original line there. I mean, we should find some kind of support right in here, based on the what was it, like the September 20 kind of lows. But it feels like there's really no support until like 225, 200 to 225 on the Qs.
No one really knows. I mean, we might have like short-term bounces around major technical areas, you know. Like
yeah, I mean, we're so far below the 200-day moving average that anything could happen here.
Well, yeah, I mean, and big mean reversions happen far below the 200-day moving
The crashes happen here too, as I've been saying.
Exactly.
You could have a huge mean reversion, or we could be at 200.
9 out of 10 times, you know, there is a bounce, but you know, the 10th time, you know, there could be a panic selling.
Just holding this market together right now is truly Apple. Apple's so self-contained in terms of it makes its own chips. It's pretty secretive. And the iPhone has such a lock on, you know, the 8 to 80 generation. And the margins are so good, but any kind of whiff, you know, from Apple, and the stocks in the 90s.
Even Apple is not recession proof.
That's what I'm saying. A whiff of that takes them to the 90s, a whiff of a problem. And with that, Warren Buffett, you know, would drop 10, 15% of Berkshire. And the only good thing about Apple is we know Buffett is in there buying into weakness, right? He's 42% long Apple, 42% of his fund. It's his Kathy Woods Tesla play.
Yeah, but Buffett is 95, so you never know. So you cannot rely on that. So
he's 95. He looks.
I don't know.
He doesn't look a day over 110.
It's somewhere there.
He's a poster child for don't eat C's candy and Coke and McDonald's into your 70s, which is kind of like rat poison. So what are you doing? What are you doing? Because it's miserable.
I mean, I'm mostly in cash, just protecting my capital, protecting my confidence, because we know that when the market, you know, gets better on the long side, I'm going to be really aggressive and I'm going to make good returns very quickly.
You will.
And in this market, I just prefer to do less, just take fewer trades, you know, here and there, you know, take the occasional trade, but with a smaller size. So not really looking to do anything aggressively. I mean, the next potential support for SPY is like 350.
Yeah.
So if I see some
350 on the spot, there's a huge difference between being down 20 to 30 and 30 to 60. And your whole goal now, as I tell a lot of people who are down, you know, 30, including myself, in my model, you know, kind of, it's very high cash, but still down 25+% this year, is don't get down 35, right? Find an up market, find some more easy pitches, trade around a few positions, and just stay in the game. So you get in shape, make sales calls, you know, get yourself mentally positioned, because we know what's going to happen. You've got the Fed raising rates. Maybe it lasts 6-7 more months. And I'm telling a lot of people that ask me, so I'll share it here. You don't need to read a lot in a bear market, okay? Because not enough good ideas will get traction. So the idea is to comb through lists of stocks and find names that you can do some work on, and focus on talking to your smartest people in your network, because this will turn at some point, right? And when it turns, growth always comes back. It may look differently. It may be semiconductors, it may be biotech, it may be genetics, it may be drones. But if you're down 60%, the math starts getting staggering about what you have to start making without taking crazy bets. So if you're down 25 to 30, it's not game over, but it is about getting yourself mentally prepared for the next bull market. And you don't have to catch the first 20% up of the next bull market. Bull markets are 200-300% index moves, which means 1,000 to 2,000% moves in the leaders. And, I've just been telling so many people this, and it was just on the way down, everyone was like anti-cash. And I'm like, cash is like up, US dollars up 8%. And again, that's about what the inflation rate is. But in a bear market, cash always in a, last 100 years, US dollar in a bear market outperforms. This is the first one, Ivan, though, that buying cheap, like bonds. I mean,
yeah, it used to be the go-to place, during bear markets, but not this one.
Yeah,
every bear market is different.
And high yield. This is just a mess, and it makes you feel stupid and dumb every day. I don't know what. And again, this is the first bear market so many of the CEOs in my portfolio, even mature guys, have really seen. And it's the first one I've seen where we 75 basis point hike, bonds having the worst year ever, venture not working. But I do feel that acquisitions will happen, even startup acquisitions. I don't know when it'll happen. The smartest people that have been right for a few cycles, and I go to Fred Wilson, was talking about late next year. There's nothing wrong with sitting out a year or 6 months and coming back to this. And I mean, we've been covering this since November, December, like things started to turn here. But with the indexes below the 200-day, pull up the S&P, Ivan.
No.
Just not good things happen when you're this far below the 200-day moving average. Like you said, getting short here, where in a reversion to the mean trade happens, will just break your heart or break your spirit. And I just would not be surprised to see some sort of crash, especially since they came for energy. And everybody's shooting, all the politicians are shooting to hurt the energy companies right now. So, the government's heavily involved in the markets right now somehow. So I think you got to just be extra careful. You're as nimble as they come, and you're saying, what, you're 60-70% cash? Oh,
even more than that, like 90% cash. And I'm just nibbling here and there just for short-term trades. I've been pretty conservative in general this year. Just protecting capital, myself and my clients. But yeah, so far this year.
What's it like talking to your clients? Like, this is the first, are you seeing, I mean, your people, I talk to you once a week because I know there's not much to talk about. We'll go running tomorrow, but like, what do you tell people? Like, are they second guessing yet? Are they saying, get me out of cash? Or they?
Well, lately I get the occasional text message about, being more aggressive on the short side, that might be a contrarian.
Because SQQQ, which is SQQ, which is the like triple Q, that's all people are talking about. SQQQ.
Yeah.
I don't understand why. I mean, this thing could spike to 80 to 100, but like, if you look up FAZ, Ivan, I remember this in 2008. This was, I don't know how far back it can go, but
well, the way it's structured is just, it's a broken.
No, but you know what I mean? This is all people talked about in 2008. The aftermath of aftermath of this tech crash, SQQ will be $1 again. Like, this will trend back towards $1.
Yeah, the TQQ is
the amazing thing that I'm just so aggravated about, forgetting CNBC for the moment, is this Cathie Woods. It's one thing to be wrong, but if you overlay TQQQ, which is 3 times leveraged NASDAQ, which is a terrible product because it has daily decay. If you look at a chart of the TQQQ, which is just an enormously stupid product.
Yeah.
Okay? And overlay it, I don't know if you can, with ARK.
I mean, I can, but I don't think it's going to pop up.
I'll tell you what you'll see is that this terrible product with daily decay, okay, which is just a stupid 3 times leverage QQQ, has totally crushed Cathie Woods both on the upside and on in this bear market. Okay, so it should lay a myth the idea that like you treat these people like God. Okay, her whole incentive is to gather assets. Okay, and shame on the media. It's fun to have like a God on the way up, and they built her up, and now we'll tear her down. But this is terrible. She's out there now, like talking about the Fed versus like the Fed was the reason her portfolio was up. And so people really need to take this bear market and kind of just remember that they can do this themselves, and there's products out there that will give them all the excitement that they need on their own. But just handing off your money to people who spend their time on TV and gathering assets is not a good idea. And so use this bear market to kind of build a trusted network and some people that like pay for some real mentorship, not just.
What is your experience, Howard, with investing in hedge funds, like especially crypto hedge funds, which you've been doing?
Well, I had my own experience of running one, and I cared, but I couldn't beat the market. And it was just the mental frustration that your managers are under to try and beat the market is not healthy. So understand that like your managers know when they wake up every day that they can't beat the market. And so you're paying those fees. And I would say if we look at the S&P, even if we pull back up to S&P, and you know this because you've done it a long time, the one great thing about, and it is an amazing thing that Vanguard did and these ETFs, is because of the low fees. And forgetting all the stuff that I hate and all the corporate banking ripoffs that go on behind the surface. The one great thing about the American markets is that you can get access to it. As for as rigged as it is, this is, all the scams like ESG and all the backdoor dealings, you have access to the American economy, and that is what, 10 to 12% a year. I mean, that's just the number, right? And it's just amazing how much money we all spend and how big an industry it is trying to beat that number.
It goes in cycles, Howard. I mean,
no, but 80 years, what is it, 10 to 12%?
I mean, it didn't really exist 80 years. It's like the SPY is relatively new.
No, but you're saying the US market has returned on average.
On average, about 8%.
Okay, 8%.
But
so
it goes in cycles. Like, for example, from 2000 to 2000 and let's say 10, it was like no return, right? It was just the dividend.
But I'm saying 20-year cycles. I think, Josh, I think I've looked at enough charts to know, like, if you invest for 20 years, you can expect 8 to 10%. Even without timing. So so that is market returns, right? So if you're going to go into the market thinking you're going to become wealthy, you're generally the sucker in the room. The market is there for helping people grow their wealth and retain their wealth in a diversified way. And this bear market is a reminder that it's not that these things don't only go up, and manage your expectations to that 8 to 10% annualized return. And what's interesting is all these crypto companies, as much as I've given back in crypto, I cannot believe some of the scale. I never understood these high yielding 8 to 12% accounts by like young people both falling for it and promising it. And the amount of leverage in the system, we're never really probably trading on fundamentals, but now they can't trade on any kind of fundamentals because we don't know how much ridiculous leverage is in the system and how many weak hands are actually out there. And at this point, you kind of need the institutions to embrace this, or these things will tend towards zero because nobody knows what they own right now.
Yeah, many of the international crypto brokerages are offering, 100 to 1, 200 to 1 leverage, something, that you cannot get, in the US in stocks.
Yeah.
And a lot of people were like really highly leveraged, not just hedge funds, but also regular people.
Yeah.
And what happens during a bear market, those people get wiped out and they become forced sellers.
Yeah. There are so many forced sellers. And,
just don't use leverage if you can. I mean, yeah.
But you don't know who has
yeah.
leverage in the system, is what I'm saying. And you, like, I don't think I was using leverage, but I don't know all the people that I was allocating capital to within crypto through Multicoin were using leverage.
But even if you're not, the fact that other people are using so much leverage, they're gonna impact your position, right?
I'm impacted, which is why I was a seller all last year of whatever I could of things. And because you could feel the silliness, you could feel the leverage in the system, you could feel the sloppy behavior. But again, like, I think it's not, I mean, the good news is the Fed has put themselves in a position by next year to get back on the offensive, which is helping end a recession or get rates pushed down. Like, I think, you know, the Japan playbook at some point will come back into play, where there's so much pain, they have ways to get rates to come back down. And they've got to tame inflation. Like, what's your feeling about this? They got to tame it.
I mean, hopefully we don't become the next Japan, because if you look at the Nikkei, average, like, they haven't really reached their high from, the 1990, 1991. So it's been a really terrible 30 years for their stock market. And
no, I'm just saying they have a playbook, meaning Americans will never beat Japan because we spend money. Americans like to spend and use leverage. Culture-wise, Japan, what didn't work in Japan,
hopefully, I mean,
is they would send Japanese people checks, Ivan, and the Japanese would not cash them. The government would send Japanese citizens cash to spend, and they would not spend it.
They would save it and they would invest it, on the US market where they can get some return. But go ahead.
Go ahead, sorry. No, at some point, the Fed will be back in a position to cut rates and induce growth. And
I mean, the problem is that if they keep doing what the Japanese government is doing, like buying unlimited amount of government bonds so they can keep interest rates low, at some point they're going to break the US dollar.
No doubt.
So
no doubt, hiding out in the US dollar, as I'm saying, I'm on borrowed time. Like, I'm not trusting of the Fed. But what I am saying they can do is stimulate. Again, how they do it is dangerous, I get, and it's a little over my pay grade, but they are trying to break inflation, which is basically was their job to kind of get in front of this. So they'll probably overshoot on the other side of this, Ivan, but it puts those investors that like are being conservative and keeping their heads about them in a position to ride the next growth wave, because growth will return.
Yeah.
And tech is deflationary. Tech is deflationary. Tech products are deflationary by nature. Anyways, are you seeing anything that looks good? Like, I was looking for some.
I mean, lately, like, it might sound funny, but Chinese ADRs are kind of looking.
I know, but like, how do you, with like good faith, trade these?
I know it's really hard, like, to put yourself in that situation, but just
But they are in a position where they can cut rates there, right?
I mean, looking on a daily, some of them are kind of flattening and maybe offering some short-term opportunities, but it's. I mean, I guess from contrarian
at this point, it's like trading colors.
Yeah, from contrarian viewpoint, no one wants to touch them right now, so maybe this is why some of them are working.
No doubt. I mean, they're just on my do not touch list.
Yeah. So
is there anything in their biotech showing any kind
of? And then I mean, there's the occasional biotech that is kind of acting, but they're super choppy.
Like therapeutics. Look at you finding these. Okay, what's the weekly look like on that?
Yeah, I mean, it's just sideways chop as of right now, which I mean, in a bear market, so many of the breakouts are going to fail.
We're losing healthcare. We're losing XLV. We're losing XLV.
So many of the gaps are getting faded. It's just it's basically the rules that help you make a lot of money in a bull market. You kind of have to reverse in a bear market. Like, if you see a big gap, it's probably going to get faded in a bear market. So you better be short for a day trade. In a bull market, you buy the big gaps because this is usually the beginning of a 100% move. So the rules are reversed.
Yeah, and I tell you, the scariest chart is to me semiconductors. They led on the way up, and they're finally really underperforming. And I don't see any kind of support till like 160 to, you know, it just.
I mean,
And you know, that's generally been I mean, that's a scary business. And we've got the terror anyways. So, you know, these look terrible after having
yeah.
generational kind of runs.
I mean, AMD went from what was it like?
Yeah, I mean, it's not like these didn't have
2 to
generation,
140. So yeah, I don't
and the
know.
technicals didn't really matter on the way up. So all those people like trying to play technicals on the way down.
Wow, NVIDIA 4 to
Yeah. So, you know, you can understand why sellers will continue to show up because there's still some people with massive gains in these. And then you have to be really careful about owning individual stocks in these bear markets because you don't know how many weak hands own your stock, even if it's a great company and are forced to sell. So, so anyways, I look forward to running on the beach.
Yeah, see you
What are
tomorrow.
you
then.
doing with your time? Like, are you screen watching, or are you like, what do you tell people to do with their time when there's not much going on?
Just study past winners and just refine your trading system. You know, I'm constantly running my a couple of my screen. You know, one is just for stock in an uptrend. Lately, it's been almost empty, and then another screen that I run is just high relative volume, which tends to produce, you know, good ideas every single day for some, you know, short-term moves. So there's always something to do if you want to do something. You know, the question is, do you really want to be that active in this environment?
Yeah,
So
I agree. All right, my man. Good to see you. I'll see you tomorrow in
all right.
person.
Yeah, see you
See you,
tomorrow.
everybody.